Welcome to Bitcoin and Crypto Demystified. I'm Simon Lambert of This Is Money, and I'm delighted to say that joining me in the studio, I have Glenn Goodman, the best-selling author of The Crypto Trader, and Simon Peters, crypto analyst at eToro. For the next 45 minutes or so, we're going to be talking all things crypto, from how Bitcoin emerged to why rivals were launched, the merits of altcoins such as Ethereum, Cardano, the rise of meme coins, and also how the blockchain works and why people are excited about decentralized finance. My two guests are going to answer some of your crypto questions that have been sent in with the aim of helping those investing or thinking about doing so to be better informed investors. But first, before we get started, a caveat. None of today's discussion constitutes investing or trading advice. If you do decide to buy crypto, do your own research and be fully aware of the risks. Crypto is fascinating, but it is unregulated and unprotected, and it can be the Wild West of the financial system. Prices are highly volatile, and that means you can lose money fast. Even Bitcoin, the most famous crypto, has managed to double, halve, and then more than double again this year alone. Investing in anything high risk should only be done with a small and manageable part of a properly diversified portfolio. And remember the FCA's warning. Those investing in crypto should be prepared for the risk that they lose all their money. So, warning done. We are going to go straight to a question from a reader, and you'll understand why here. Glenn, I'm going to come to you first. My question is pretty simple. What is Bitcoin? I have absolutely no idea what it is or how it works. So we're starting with the basics here, but I think this is something that actually for a lot of people who are looking at crypto and going, this is a thing. This isn't going away. I may not want to put all my money into it. You certainly shouldn't put all your money into it, but I do want to understand how it works. What are the basics there?
I hate this question because I'm always searching for the perfect analogy. And because Bitcoin is kind of unique, or certainly it was unique when it was invented, it's quite hard to compare it directly with anything else. But I'd say the nearest analogy that I like is in-game currencies, like V-Bucks in Fortnite and Robux in the very, very popular kids game Roblox. Anybody who has kids who play these games, or any kids who do play these games, instinctively kind of now understand that these currencies have value. The value is put on by the companies that have invented the currency, but nonetheless, like Bitcoin, they don't exist as physical things in real life. And actually, the money that we use every day, the pounds that we use every day, we don't use a lot of cash these days. Most of our transactions, all of us here, and everybody watching, it's just bank movements from one bank to another. You know, we buy something online, the money goes from there to there. That's how most of our stuff, including grocery shopping for many of us, is done these days. And that means that there's no actual physical money ever existing in that process. It never really exists at all. That's what people don't truly understand, is that only about 3% of the total money in our economy is actual notes and coins. The other 97% or so is just bank transfers, where we buy something online and it goes from our bank to someone else's bank. So Bitcoin isn't that different in that regard. And like I say, you've also got in-game currencies which are invented by corporations. The difference with Bitcoin is that no corporation is behind it. This is the bit that often confuses people, because it's like, how can nobody be running it? Who's running it? A computer program is running it, which is kind of scary thought in itself, in a way, like if it became the currency of the world. And I think it is mildly possible. It's just about possible Bitcoin could become like the main global currency. If that happens, then, there will effectively be a computer program running the entire global financial system. But the beauty of the program that the mysterious Satoshi Nakamoto, who nobody knows who he is, the beauty of the thing that he made up is that it's possible for it to run entirely on its own, with incentivized players like miners, who you've probably heard about, and the people buying and selling the stuff, and all the other services that attach to it are they're just slaves to the code. The code is what dictates who does what.
And what's the blockchain element of it?
Well, that's the technology that underpins Bitcoin. So just to expand on what Glenn was saying there, so with these transactions that are happening across the network, they are stored on the blockchain. That essentially is the decentralized ledger, which holds all the transactions, keeps accountability of what each person has in their Bitcoin wallet. it's called the blockchain. Essentially, what happens, to put it in a simple way, all of the transactions are put into a block, and then that block is what is hashed. Is one of the technical terms used, and the hash of the previous block is then put into the next block to be added to the blockchain. So that's how the blocks are linked together through this hashing algorithm, and that being included in the following block to be added, hence the term blockchain. But essentially, it's just the technology that underpins Bitcoin, which holds all the transactions, to put it simply.
And that's the same technology, Glenn, that underpins other cryptocurrencies as well. You mentioned Ethereum earlier. So for people who don't quite get the difference, don't quite understand, what is the difference between Ethereum and Bitcoin? And is Ethereum even really a currency? We talk about it as a cryptocurrency, but is it more of a platform?
Yeah, I mean, well, it is a currency and it's also a platform. That's why I got so excited when I first heard about it, when it first came along, because it was just such a piece of genius. Well, Bitcoin was a piece of genius, but this just really captured my imagination. And actually, just to add to what Simon was saying there isn't, of course, just one blockchain. There are loads of blockchains. Bitcoin was the original blockchain. Ethereum has its own blockchain. Lots of other cryptocurrencies have their blockchains. And like Simon was saying, they're just digital ledgers. So it's just, like you would have a database full of transactions for a bank, say. This is kind of the same kind of thing, but it's distributed. In other words, it's, no one company, no one bank is in control of this list of transactions. It's sort of spread around
This idea of decentralization.
Yes, yeah, exactly. It's spread around thousands and thousands of different computers. Decentralized makes it much, much more secure, much harder to hack. Well, Bitcoin itself has never been hacked. Lots of like I said, the big exchange was hacked, but all this kind of infrastructure that's bolted onto Bitcoin, a lot of that can be hacked. But Bitcoin, the blockchain itself, very, very difficult, almost impossible to hack. So Ethereum is better, I think, because not only is it a currency like Bitcoin, so it does pretty much everything that Bitcoin can do, but on top of that, it was originally, when it came along, known as the world computer. That phrase seems to have disappeared somewhat, but it still kind of is that. It's a whole new operating system. It's like the Windows operating system or something, and then you can build apps on top of it, just like people build programs on top of Windows, all the programs we use on our computers. So Ethereum is kind of like that. You can build a whole ton of a whole world of crypto-based applications on top of it. It opened up the possibilities to make huge changes to the world. And here's the crucial point that I would like people to get into their heads about crypto in general, is that get away from the whole currency thing for a minute and think about it as a new technology, blockchain distributed ledger technology, which allows you to disintermediate the middlemen in many, many industries. That's really what it's all about. And that's what got me excited about Ethereum and the apps that can be built on Ethereum, is that hopefully we can save tons of money by scrapping entire industries that currently exist. People will lose their jobs one day, but they will find other jobs. That's the way the world works. Creative destruction. Things will be destroyed and more efficient things grow in their place. That's the dream of cryptocurrency.
And Simon, there are other. There's many cryptos, aren't there? What are the other main sort of rival altcoins to?
Yeah, so you use the term altcoins, which is essentially anything other than Bitcoin. So we talked about Ethereum. One of the altcoins that's got a lot of publicity in recent times is Dogecoin. But essentially, Bitcoin is open source, so you can go online and you can see the code, and you can make if you're part of the Bitcoin community, you can make proposals to modify and provide enhancements. But you can also essentially copy and paste the code and create your own crypto from that. And we've seen that happen with the likes of Litecoin, for example. But also, if there's disagreements within the communities as well, then we see forks happen. Most notably, back in 2017, there's a disagreement in the Bitcoin community, which resulted in Bitcoin as we know it today, Bitcoin Core, Bitcoin as we know it today, and Bitcoin Cash. So there's actually a new cryptocurrency created from a disagreement within the original Bitcoin community. So that's how it happens. Yeah.
And we've seen more and more of these sort of emerge. Some of them you talked about Dogecoin, and we're going to talk about the meme coins a bit later. But there's also new ones emerging that are much more serious, and people suddenly to get very interested in things like Cardano and Solano and things like that. Are you seeing from people who are using your platform lots more interest in some of those?
Certainly, yeah. I think with you mentioned like Cardano, Solana. So with crypto as well. Not every crypto is a cryptocurrency. Not every crypto is a coin. Some are tokens. So there are sort of different cryptos within crypto, so to speak. So with cryptos that are coins, these are sort of native to their own blockchain, like Ethereum, like Solana. We have some cryptos that are built on platforms, and their tokens. Like, for example, there's decentralized exchanges which build on Ethereum. Glenn mentioned about building applications on Ethereum, and each of these applications has its own token to facilitate, whatever it is the application is designed to do. So there's coins, there's tokens, there's cryptocurrencies, utility coins, tokens. There's a whole basket that people can get exposure to.
Okay. And to go back to a read question here, I get the idea of crypto providing a universal global ledger without the need for a state banking system. However, what is the value of any crypto actually based upon in the real world? Does a crypto have an intrinsic value? Is that an impossible question?
It's mainly thin air. Here's the problem with valuing them, and I go through this in my book, like an entire chapter talking about, right, here's how fundamental value can be attempted to be put on these cryptocurrencies, and I go through all the theories, and then I kind of go, but it's not really quite right. It's not really working, is it? Because the thing is, when you've got stocks and shares, you've got profits and revenues. It's as simple as that. That's what you base your fundamentals on, or cash flow, things like that. Whereas with cryptocurrencies, you don't have companies with profits and revenues, or if you do, they're not directly connected to the value of the cryptocurrency itself. And this is a real problem, and this is why you get these extreme volatile cryptocurrencies that rise several 100% and then fall. I mean, look, people forget in the 2018-2019 bear market, most cryptocurrencies fell like 95%. Some of them fell 99%. Some of them ceased to exist altogether. Even Bitcoin fell 85%, and that was like the most solid of them all. The problem is that this is how I see it. They're basically tech startups, right? And if you had a tech startup which didn't really have a proper product yet and hardly anyone was using it, then you might value it at a few $1 million. A VC, a venture capitalist, might value it at a few $1 million. But we've got projects on that level, thousands of them, that are about on that level that I just mentioned, and they're worth hundreds of millions or billions in the crypto market. So these valuations are way out of proportion to what a typical tech startup would be. And that is a significant problem for a trader like me, because I can't take seriously the possibility that they're only going to go up from now on, or maybe just like fall a little bit from time to time. I think there will continue to be huge bear markets of the type that we've seen in the past because of the difficulty with putting fundamental valuations on. There's no floor to the prices of these things.
And I think, for us, we have always taken, This Is Money, we've always taken a very open-minded but healthily skeptical, I would describe it as, view of crypto. And many of our readers, might have a little bit of crypto. They might just be thinking, maybe I want to get some. But it's kind of explaining to them the thing where it is highly volatile. And even if something that is highly volatile is only a very small amount of your portfolio, that can quite dramatically change the returns. Now, it can change the returns very nicely, and you're sitting there going, well, I pat myself on the back for investing in this. Or it can change them quite dramatically in the opposite direction, and if you get in at the top and then something crashes, you have a problem. And just like we say to people when they're investing in shares, if they're building a portfolio of shares, you need a diversified portfolio. There's been academic research done on it. You need about 15 to 20 different stocks to start having that proper level of diversification.
Yeah.
But they need to be 15 to 20 companies that don't all do the same thing, or are not all affected by the exact same movements in the market. And that's the difficulty for someone who's going, right, I'm going to build a portfolio of cryptocurrencies, is that when the crypto market rises or falls, it tends to be the tide, rises and falls all at the same time, potentially by different amounts. But that it's not diversification if you just invest in lots of stuff that does the same thing.
The trouble is, though, you have that with stocks as well to some degree, and people forget about that in the periods in between the sort of, every 10 years ago we get a massive, every 10 years or so rather, we get a massive crash, and people forget in the sort of 10 years in between, and a lot of financial advisors, actually, IFAs even forget that in between. Like you say, there's a lot of talk of diversification, but when the big crash comes every decade or so in stocks, and much more often in cryptos, maybe every few years or so, then everything falls at the same time. The whole lot kind of goes down together. It's a problem.
Yeah, I think also it's such a new technology as well. It's just trying to figure out what direction to take, and that's perhaps one of the reasons why it does rise and fall at the same time. But I feel over time we'll see a lot more diversification in crypto, certainly.
And if you're trading, volatility can be your friend. I mean, that's the thing that makes markets move and means that there are the opportunities to get in and get out. But that requires rules, doesn't it? And you have to stick by your rules. It's not just I'm just going to take a punt on this. So tell us a little bit about your trading, Glenn, and sort of what you do and how you do it, kind of thing.
Okay, well, I try not to be too short term, but that's my choice. I mean, if people want to do shorter term trading with cryptos, by all means do it. In my experience, shorter term traders, apart from very few, tend to lose money eventually. Longer term traders and investors tend to do better. My best trades in crypto have certainly been the longer term ones, where I've made 50 times, 100 times my initial investment. Those are the best ones, obviously, whereas the shorter term trades are harder to get right because of the wild swings in price. The most important thing, as far as my book is concerned, is the two main rules for professional traders in Wall Street since forever, which are run your profits and cut your losses. The most important of those is cut your losses. In other words, if you're losing on something, it's best just to get out. You can always get back in later if you realize you're wrong, maybe at the same price that you got out. But the point is that it goes for stocks, it goes for commodities, it goes for everything. When you're on to a real loser, just accept that it's a loser, because especially in crypto, that loser might just go to zero. It might just turn out to be a load of old rubbish that nobody's interested in ever again. I mean, that's less the case with Bitcoin, which will probably persist for years and years, and the same with Ethereum. But for most other cryptos, they go in and out of fashion. Everyone's talking about Solana and Cardano now, but 3 years ago, they were talking about completely different cryptos, which nobody even mentions now, half the ones that we were banging on about as like the big ones of the future a few years ago. It's so much down to fashion in the crypto world. There are so many projects that do similar things to each other, and it's kind of anybody's guess which one of those will win out in the long term. So I'm pretty skeptical when it comes to fundamental analysis in cryptos, looking at the quality of a project and going, yes, this one will almost certainly succeed in the future. If you see a good project, great, and that's another reason to invest in it, but it can't be the only reason, because the public and their whims determine what will happen in the long run. And like, for an old example, like VHS Betamax and the consumer, God, that's an old example, but, it's like Betamax was the superior technology, beta tapes, but VHS cassette tapes won and just dominated the whole market, even though they were terrible quality. Stuff like that happens in the world of technology all the time.
You're right, it does. Personally, I always thought mini discs were pretty good.
Yeah.
The rest of the world decided that they weren't, didn't they? So,
exactly.
Simon, you mentioned earlier about the meme coins, and seeing as we're talking about the fads and coins here and what's in fashion at a certain moment. Over the past, maybe over the past year or so, the meme coins have really become a big thing. We've seen Dogecoin, we've seen Shiba Inu, which is an offshoot of that. Can you explain a little bit more about meme coins, what they are and what's
happening? So I think with meme coins, they're generated from, as you said, a meme, maybe start as a bit of a joke, like Dogecoin, for example. That's the original meme coin. But at the same time, they do bring attention to the crypto space, and I'd hope that that encourages people to actually explore crypto, understand it a bit more. But there's communities behind them as well, you know, and growing communities. And we are seeing nowadays that communities do have an effect, and getting these coins to become really adopted in the world.
Well, people beware the tweets from a certain person as well. Yeah, indeed.